Ladies and gentlemen of the crypto space, we're live on a Friday, December 10th at 11:35 a.m. and the market is fearful. Contraindicationally, with the massive CPI print, historical inflation metrics dating back to 1982, and everyone's fearful. We'll take a look at the charts, and you can see the fear painted all over the charts. So the chart tells the average market actor sentiment. Price action is a manifestation of basically the way everyone feels, and people are either selling for taking reasons of taking profits, or they don't think it's going to go up, and that's the vast majority of actors in the market are persons that are speculating on price action directionality. Is it going up? Is it going down? If it isn't low, so I could buy, and then it goes up, and then I could sell. That's the vast majority of market actors. Now, obviously, that's not what we've been discussing for the last 2 years at this point on the stream. We're not necessarily in it for the capital gains. We're in it for the business ownership, the metaphor, the pizza shop. So while we do like to understand market directionality, whether price action is going down or up, the overall sentiment in the market, we don't attack the markets the same way as legacy finance or as the traditional way of interacting with the markets, buy low, sell high methodology. That doesn't entail we're not going to lose money, but that also entails that we're not going to have capital gains. It also entails that we're not necessarily over trading. We're not necessarily trading at all. We're not necessarily entering, exiting positions, trying to find tops, find bottoms, staring at the price chart, going out to dinner with family with your phone down underneath the table. It's going down. What do I do? I'm not home. I can't press the sell button. What do I do? I remember those days. I've lived days like that, and I just don't want to live like that anymore. I don't want to fear the price going down. I don't want to be happy when the price is going up, albeit that's just natural. You're going to get that dopamine rush, and you're going to get that feeling that your stomach, that pit in your stomach, is just falling when the price is going down. But those are irrelevant emotions. What matters is if the price is higher in 2022 than it is in 2021. Higher lows over rational time horizons. That's how you play this market without making your brain try and jump out of its skull. Try and do it different. Now, clearly, what we do can be conflated in many regards with bag holding or hodling, typically a negative connotation associated with bag holding. But I'd argue the traditional bag holder is buying non productive assets, maybe some of these more recent reflexive tokens that run purely on memes and social media and hype, or assets that just don't have anything and are hyperinflationary like Doge. And clearly that's going to be completely nuked. Shiba Inu is going to be completely nuked. That's what it is, because they're not productive assets. What we talk about is businesses, or at least looking at particular assets to be modeled as if they were businesses. And businesses belong on a portfolio contributing positive cash flow. If you model the portfolio as if it was an accumulation of businesses, then you're engaging with these markets differently than we've done historically. If you're buying low and selling high, or buying high and selling low, you're doing the same shit every schmuck has done since all of eternity, since all of history. And I don't want to be the same schmuck that's done it the same way. And I'm certainly not a bag holder the same way bag holders are typically referred. Something like that. Point being, I'm not holding assets like, oh, I hope it goes back up so I can sell to make back my money. No, I'm making money on the way down. I'm making money on the way down. I'm making money on the way up. And in fact, I have no interest in selling because I'm making money whether it goes down, up, left, right, sideways. What I care about is the volume in the markets. What I care about is market activity. What I care about is the notion that the odds are that significantly less capital will exit the crypto space in the scenario of a significant depreciative cycle. Where the hell is the capital going to go? We define the narrative, we find the conviction to stick to it. I don't expect the capital to exit the crypto space. I expect stable coins to be used more and more and more. and churn, and in bear market there's buying, in bear markets there's shorting, there's borrowing, there's debt, there's capital flow, there's monetary velocity. This did not exist in 17, 18, and 19 leading up to the 2020 surge after the COVID crash, which was a bottom capitulation event. This is not traditional hodling. You're making money on a weekly basis. All right, it sucks that you're going to be making less. But if you're chosen particular assets that have a long time horizon with a ridiculous narrative of disintermediating legacy financial products and services, all right, so your revenue is down. The pizza shop is making less money, but the damn pizza shop is still there. You're still cranking out pizzas. Mom and pop got to eat. You're just making less money because there's a frickin' recession. We got a recession in the crypto business, in the crypto industry. Businesses are making less money. Oh, the horror. You're making money sitting doing nothing while other schmucks are out degenerate gambling on price action. You know, there's words that could be said about that, but the bottom line is the degenerates are going to gamble. The people that don't have a capacity to look at markets any different than they've done historically are going to do what they've always done. They're going to gamble. So I'm going to extract that capital. I'm going to capitalize on human beings' inability to change and evolve. 11 minutes, an intro monologue. Bam, let's pop it over to the main screen and see who's in the stream. Jumoko's in the house. Joe's in the house. Dan, hi Noah. I'd love to get your take on CVX on the increased bribes. Good position. Yeah, I popped my bribe over to Frax. I mean, 5 mil. That's going to be a heck of a weekly payday. Frax is holding up in price very nicely, considering it's deflationary. Victor, hello. Paul, good day. Risky crypto, morning. Paul, what are you buying today? I'm not doing nothing. I'm not buying and I'm not selling. I'm looking at the charts, trying to understand how the portfolio is doing, how business is holding up. I have my job. I make my revenue. I pay my bills. This is just capital management. This is mutually exclusive. Compartmentalize your capital. You got capital that you're saving for the future and you're managing, and then you got capital that you have for overhead expenses. You have cash flow, you work, you pay your bills. I mean, clearly, you shouldn't be spending more money than you make. I mean, we're not even in that type of financial discussion. We're primarily a financial discussion of actually how to manage savings and manage capital. Shouldn't be spending more than you make. That's clearly not a sustainable path. So that means your income from your job, your income from whatever the heck you're doing, maybe you're selling t-shirts on the side, that pays your bills, so you're good. It pays your bills. You've been able to save up a little money over the years, and you're able to put that money to work in the crypto space to grow businesses. And at some point, you may not need to work. At some point, maybe you want to switch jobs and you could be like, okay, bye guys. And you have revenue to cover your overhead. The whole point of these businesses, of these crypto businesses that you throw on your balance sheet, the whole point of this positive cash flow is it provides optionality. So you can unfuck yourself from legacy finance. You're given the freedom of choice. You don't need the income from a job to cover your overhead. You have it, great, because that's the appropriate way to be a human being. But if you want to quit your job, great, you got cash flow. Get another job. Do what you want to do. You'll get that cash flow back. Maybe it'll take like 2 weeks or a month to find another gig. Get a gig. But you can. But if you can't cover your overhead with your capital being put to work, then you don't have that optionality. You are not free. You have to work to service your debts and cover your overhead. You're capitalistically screwed into indentured servitude, serfdom. You're fucked. So save up your money, save it. It doesn't mean speculate and gamble. It means accumulate. If you're nervous, accumulate stable coins and get 30% of the money in asymmetrically volatile assets, asymmetric to the upside as well as the downside. So that's the deal with that. Booster in the house. Captain, what's your take on all the drama going down at Sushi? Unknown, off the radar. I read DeLong's tweets. It's complicated. I like the way Danny talks about potentially speculative opportunities or opportunistic things that could be done with regard to Sushi as a platform. It's irrelevant for me. I have ignored Sushi, particularly because it's not a productive asset. Well, it is, but it's not meaningfully productive. It doesn't have critical mass productivity. It has immense opportunity cost, and it never was a very productive asset. Crypto bets, good morning. Tapsy in the house. Andrew, seems the stock market is going into risk off. Let's take a peek. I got S&P futures up. I don't think so. That's an inverted hammer after a downtrend. Now, clearly, we're looking at the daily, and that's a solid bounce of the 100 SMA and the hourly. So this is still in bullish territory. It literally just broke the 50 SMA. 50 SMA rejected to the upside. Nice bullish uptrend. Support on the 100 SMA. Bear in mind, this is an index. Sven Hendrick mentioned this morning. Something I liked very much, that maybe the bubble already popped, and clearly the index is predominantly like 5 assets: Google, Facebook, Apple, stuff like that. The big boys, Microsoft. That's these indexes. That's it. So that's what you're looking at here. Manifestation of very, very few assets. And Sven very astutely, potentially, speculatively observed that the vast majority of the stock market is absolutely destroyed. 50% off highs. So these indices don't mean much without context. I don't see no risk off at all. I see support on the 100 SMA and the hourly. Clear support. And it's not even breaching guppies to the downside on the 4-hour. Rejected on the 50 SMA as well. And the daily, does this look bearish? I mean, you guys see what this is setting up. Oh, hello. Bloop, bloop, bloop. Inverted head and shoulders, possibly. Pretty big one. So I don't see risk off, my friend. Jumo, good morning. Patrick, takes practice to not fear the markets. We're all getting there at different pace. Yes, we can do better. 72 people in the stream, 18 likes. We can do better. Well, it's not about not fearing it. It's that fear is information. All information is important. The emotions you have about the markets are important. It's just about whether they're relevant or not, or meaningful or not. They're always meaningful, but they're not necessarily actionable. It's like confluence on technicals. You want multiple indicators, multiple pieces of information to make the best decision possible. And emotions are not very high on the list. In fact, in many regards, they're a contraindicator. You want to do the opposite of what emotions say. But they're only a part of a good, solid, rational decision-making process. First time catching the stream, Jumoke in the house. Crypto bets, what's your take on BTC into WBTC? How do you interpret it? It seems like a bit of a gray area. Maximum gray area. No one knows what the fuck they're talking about, including the IRS. And it's arguably, from a technological perspective and a whiteboard and 30 minutes of my time, that it is not a taxable event. Plenty of people have no idea what the heck they're doing. Maybe it's taxable, maybe it's not. In the end, the IRS will say, but technology will allow for a extremely strong and, I would say, inarguable case that it is not a taxable event. But nobody knows anything. You can't call anyone. SEC doesn't have answers. IRS doesn't have answers. Nobody knows what they're doing. They're asleep at the frickin' wheel. And that doesn't mean you don't interact with these markets. It means you hit these markets hard. You process the markets. You understand the markets. You attack them. You put them in a headlock and a chokehold, and you take it to town. Trying to decide if you move 50% into CRV, current assets are non-productive. Well, a non-productive portfolio has infinite opportunity cost. The size of the portfolio is irrelevant. You shouldn't care about the dollar denominated value of the portfolio. What's pertinent is how much cash flow you make on a weekly basis. In bullish times, you'll have more cash flow. In bearish times, you'll have less cash flow. And clearly, there's an opportunity cost analysis. If you have excess cash flow and you accumulate a little bit of liquidity, dry powder in your treasury, you're able to deploy it opportunistically if there's a discount on price. And that's what days like today are. Now, clearly, there might not be a bottom, but this is where you buy. You buy at supports. Maybe it falls through, and then you buy at the 200 SMA. Maybe it falls through, and you go out to the weekly, and you buy on the 50 SMA. Maybe you buy on the historic trend line on support. You're buying on the way down, and you're accumulating discounted cash flow assets. Personally, such an incredible chart. Such an incredible chart. Look at the TWAP. I love how the TWAP is above this historic price action line that for months in 2021 was a resistance. And look at it bouncing off the TWAP. It's not a massive bounce thus far. It's an absolutely monstrous wick, but you can see that it did bounce, and it is higher than the TWAP and the historic price action price point. Absolutely incredible. Any thoughts on how to start out as an incumer? Say if you had your eyes open only recently. Stablecoins on convex, you have to get into the rhythm of accumulating capital, accumulating cash flow, looking at yield, looking at rate of return instead of the total portfolio balance. You can imagine I've seen this at 3.4. I've seen this at 0.6. This was at 0.6. This was at 0.6 down here at $1. We're here. This was scary. This is the last capitulation down, the last derivatives cascade that we had the middle of the year. That was a very scary time. But you have conviction, and this was we didn't have as much conviction back then, but we started to see the historic triangular compression emerge, and then it hit, and then this wick right here. Oh my God! And then we saw the breakout. Oh, what an incredible chart. Oh my God, what an incredible chart. Historic hyperinflationary decay, DeFi summer 2021, irrational exuberance, Bitcoin derivatives cascade, price stabilization, historic trend support, further trend confirmation, trend breakout. Resistance flip support, previous resistance, previous resistance, previous resistance, flip support once on the weekly, and thus far it's not even testing again on another weekly. Thus far, this is what's showing as support now, not even previous trend resistance, but previous price action resistance for weeks. This is bullish bearishness. Doesn't mean it doesn't go down, but this is an extremely bullish chart. Extraordinarily bullish. Depreciating price point has nothing to do with bullishness or bearishness. The chart tells a story. Price action is mutually exclusive. Even the fact that you have a little bit of support on the TWAP here, woo, it picked up. It fell down. It picked up. It went high. This is an inverted hammer, first of all. Let's go to the daily and see what that looks like. Oh, look at that. So you have a convergence of the 50 SMA, the 100 SMA, and the TWAP. Was that the TWAP? No, the 50 SMA has been broken, but you got the TWAP on the weekly. You got the 100 SMA on the daily, as well as the historic price action line of resistance, support, flip support. So that's a trifecta. You have three pieces of confluence from a technical perspective suggesting bullishness. Price is going down, bullish. Price going down is not necessarily bearish. The narrative is only supported by the price action at this point. So Jamoke, a non-productive portfolio, has a significant amount of opportunity cost. What's most pertinent in restructuring a portfolio is finding conviction in positions. You want to own things. You don't want to be buying and selling shit. If you're going to sell something, what the heck are you going to buy? So that's the deal. You start off with stables. You got to understand how to hold things. So you got to accumulate stables. If you can't accumulate stables, you're not going to be able to accumulate extremely volatile assets like Spell. This is such a freaking bullish chart. Meanwhile, look at the price action. Look at the price action. I mean, this thing was down 70% at the low this week, and then 85% retrace last week. That's extraordinary price action. This is bullish. The only reason it might seem bearish from a price action perspective is because someone bought it at the top. But if you bought it at the bottom, you're up 7,000%. You have 7,000%. Incredible where it's come from. You know, there were months when it did nothing, months that it did nothing, and then it just exploded. But now it had the TVL and the amount of debt that's on the platform is extraordinary. Produces an enormous weekly cash flow. And the narrative emerges. But it's an extremely volatile narrative because a lot of people bought up here. Irrational exuberance buying, but they didn't fully understand buying when it was significantly departed from long-term averages. Obviously, mean regression in the crypto space is alive and well. Price discovery, that doesn't happen in legacy finance. You don't have any price discovery in any of the long-term time frames in legacy finance, but we've had a full mean regression on a long-term weekly time frame. If this holds the TWAP this week, that's an extraordinary bullish technical metric. On the daily, you have gray guppies. It hasn't even hit red guppies. We broke the 100 SMA to the downside, but higher lows. Higher lows is nice to see. Lower highs, skewed triangular compression. It'll take time, but this is where you're buying, not up here. Not buying up here. You're buying after blood, after it's been hammered. And you dollar cost average in. Someone with strong stomach bought down here. A lot of people bought down here. If you look, massive amount of people bought down here. A lot of people bought the low. And now it's doesn't seem to have the same momentum to get further down. So there's less sellers than there are buyers. There's more buyers. The price action is higher than the most previous low. This is a bullish chart, other than the 75% retrace from the top, which is the most trivial way to look at an asset. The final collision, hey, Gilot, capitalize on the inability of humans to adapt or evolve. Oh, yeah, I'm going to do that. I'm sorry, I'm going to do that. One R's don't want you to have life with fam. Oh, IRS. Yeah, that's true. Hey, Noah, can you tell me your thoughts on EGLD? It's a big deal. Um, the bridge needs significant amount of work, and the AMMs are in infancy. Staking, I could give a shit about. So if you're staking an asset and getting inflationary yield, I don't really care about it. So I'm not interested in participating in anything that's going on thus far. So they probably have the initial stages of an AMM with was it Mayor, um, which is cool. That's great. I look forward to that liquidity growing, stablecoin bridges, the bridge for volatile assets getting significantly more robust, and it's just like any other network. It's great. We've had Polygon, we got Phantom, we got Avalanche, we have Arbitrum, and now we have Elrond. Great, lovely. I look forward to the same shit with Cardano. Polkadot hubs, Polkadot parachains, and Cosmos hubs, they'll be the same. And obviously the plethora of chains that Polygon's working on. So there's a whole lot of stuff, whole lot of chains, whole lot of options. And what's pertinent is an opportunity cost analysis, uh, risk assessment, rational time horizons, and logical position sizing, stuff like that. Booster, Coinbase Lend is now live for everyone except Americans. Typical. Typical. Mike Pye made it. Adam, daily meditation with Noah. Lewis is in the house. Hey, Lewis. I'm looking to put my spell profits into a new large revenue producing pizza shop, Curve, CDX, or both. Well, reallocating capital is a subjective choice, my friend, but I'm not going to argue with the choice of any of those three assets. I think they're quite meaningful. Curve is extremely cash flow positive. CVX is cranking out 40 something percent returns with obviously the bribes. And Spell is extremely volatile. And I look forward to them carving out MIM as a mutually exclusive revenue stream, not like compounding into SPEL necessarily. And the Merlin candles, I think that is something for the monetary policy to evolve. I think that would be a little bit better, but we'll see how that plays out. Um, all in all, um, I don't have any intentions of liquidating this position. In fact, I borrowed debt against it, so it's use it as a collateral asset. Tough choices, my friend. That's the bottom line. I've been meaning to try and find some time. We'll jump on a call as soon as I can. I'm just, as you can see, I'm actually exhausted at the moment. My daughters had me up all night long. I slept in my daughter's bed, and my daughter slept in our bed. So the two girls, the middle of the night, came into our bed, and I'm like, I'm out. And I went to my daughter's bed, and I fell back asleep. Bunch of little characters. Live in the house. Pleasure. Jake, buybacks when spell price is low is actually good for spell holders. Yeah, the liquidations have been ferocious. Do you know about GMX on Arbitrum? Yes, it does. It's pretty cool. BCO, any thoughts on Daniel regularly speaking about his token prices and openly buying them? I think Daniel is a solid character, and I much appreciate his candidness, his productivity, his creativity. I see his thoughts, not just on Twitter, but in private chats. I like him very much. He seems like a very solid, reasonable person. Hey, Noah, got an opinion about YVFTM? Yeah, it's pretty cool. If you want risk on to, uh, you know, FTM and directionally bullish exposure, I don't necessarily know. I don't necessarily know what else to say. Got to buy diapers again. Go stay dry overnight, my friend. Yes, indeedy. Why is someone gaining 50% capital gains worse off than someone gaining 50% from cash flow? Uh, you got to do the analysis. There's a variety of there's a variety of ways to look at it where cash flow is a strategically superior methodology to interact uh, with your with your portfolio. Metal bums in the house. Peter Stover. It's a NFTable as a chart. If you like timer, oh, I'm looking to Rome. Don't shill. No shill. This is the no shill zone, my man. um, we'll see. I'm not into a spec position. I did take an own position. It's now actually food for thought. One, two, three, four. Wow. Convex depreciated a bit. Ohm is now the fifth largest asset in the portfolio, built off debt off spell for what it's worth. And it's been holding up very nicely. It's actually up 14%. Well, it's the only thing that's green in my portfolio on the daily. I bought it like 490 and it's 521, so that's up a nice $33,000. Nice to see. Colin, have you changed your osmosis position? Nope. I've been sleeping on it. Let it do what it's going to do. I'll check back on it next year. Encoder, a pleasure. Patrick Vortec? I don't know, but it sounds good, my man. Brian Morrison's in the house. Charlie G, thank you. Thanks. Happy holidays to everyone as well. Going to wrap up the stream in a couple minutes. Magnus, nice to catch you live. It's a pleasure. Patrick, did EPS airdrop stop for CVX CRV? No, they look fine. Everything's fine. It's Friday. I could check later, but I don't see why they would have stopped necessarily, but maybe they did. I wouldn't see how that negatively affects things in many regards. Maybe it's just a temporary malfunction. Maybe it's something more. But it is what it is. 86 people in the stream, 36 likes. We could do better. Let's stop over On the Ethereum chart, breaking some long-term moving averages on the weekly, on the daily, holding support on the 100 SMA. That's nice to see. I think overall macro crypto has been holding up. How can you say this is bearish? It's finding supports. If you see lower lows being put in, but we haven't. Is there a lower low down to like 2200? Is there a lower low down to 1400? Not going to go straight down. Yeah, big wicks, but this is a directionally bullish chart. In fact, it's looked like a rising wedge, unfortunately, or maybe a channel. Get a little pitchfork action going on right there, actually. I'm not going to draw technicals at the moment. Last question. Dominic in the house. Got out of work early. Glad to make it back for another live one. Listened well and allocated 1% to a Blizz position at 68 cents. Yeah, I don't like Blizz and Geist right now. I'm not even looking at it. It's off the radar. Blizz is getting absolutely destroyed. Geist as well. Hyperinflationary. Basically horrible from a price action standpoint. I think Blizz is down to 30 cents. I'm sorry, my friend, your position may have paid itself off, but you lost half your money. And so did I. I bought it $1 and I bought it 50 cents. But I also paid off the position. So Blizz and Geist, I was able to pay off the positions as well with the amount of yield that was coming in. It's still very productive. It's nothing really to get, um, you know, too negative feelings about. If you're buying now, I mean, 609 a day off 20 grand at 900% interest is nothing really to complain about compared to 0.01 interest in a bank account. Problem is the asset's been actually or astronomically destroyed from hyperinflationary pressures. So it is what it is. I don't trust the asset. I wouldn't buy it right now. I don't think it's bottomed. I don't care if it's bottomed necessarily. What I want to see is look at that's why total market, the amount of capital on the platform has been bleeding. And if you look over here at the stats, oh goodness, this was up at 700. Now it's at 100. It's a horribly productive day yesterday. Horribly not productive day yesterday. So I'm not liking what I'm seeing. I would not be buying Geist or Blizz. In fact, they're completely off the radar. I'm not even looking at them, which is something that I'm not looking at. Um, I hope you did well, Dominic. Be very careful. 6.8 before it ran up to 250. Be very careful with the assets. Metalburn, what's your total portfolio? Can you do a stream where you go over your general allocation? My general allocations will not be good for anybody. My general allocations are a manifestation of time in the market. My position sizes would not be what they are if I was taking positions today. Time in the market has caused spell and curve to be the vast majority of the portfolio. I'll tell you the position sizing. 70% of the portfolio is spell and curve, and that's irrational. Um, I would not have that if I was taking positions today. I have that because time in the market and the spell has become just such a large amount of capital that I'm able to borrow against it to generate rationally sized secondary positions. I could just literally have like 90% over collateralized on my spell position, and that's a good part of my own position currently. And literally, spell would have to collapse to like 0.003 cents to even risk liquidation. And in the meantime, I have plenty of capital that I could liquidate to service the debt position and maintain a healthy collateralization ratio. Um, let's wrap this up. Johnny, you said, did you hear about that Audible play? Time Desert rolling out front. Oh, that sounds good. Front run liquidations. That does sound pretty cool. That does sound pretty cool. I like that. Thank you for that little piece of insight. Friday, December 10th at 12:09 p.m. I thank you everyone for joining today. As always, tell everyone to subscribe. After party on Discord. Aspid's coming up later today when I have some time. Wish you all a safe and wonderful weekend, and I will see you again on Monday. Peace.